Wednesday, April 7th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the great silver bull market of 1919. I hadn't heard of this bull market until a few days ago. I have to thank one of my followers, follows me on YouTube. I also follow him on Twitter. He sent me a link to an archive of the MohaveCounty Miner newspaper from Arizona from 1920 was the article, I think, or yeah, January 24th, 1920. And there's a lot of things in this article. It's very detailed that I didn't know about. I didn't know, for example, that the gold-silver ratio was around 37 from 1905 to 1915. I always thought before World War I, during the gold standard era, that the gold-silver ratio was around 15 or 16 or even 14 in the UK. But no, silver was manipulated all that time as well back then. And how actually the gold-silver ratio dropped after World War I to around 11. So even below this 15, 16 level. And there are a lot of people who, especially in the mainstream today, the same people who are probably the same kind of people, I mean, not the same exact people, who are manipulating, trying to keep silver down, that are doing it today. And I found it really interesting. So we'll go through parts of this article. It's a very long article. I'm going to put a link to this article, to the archive, in the description below. You can go through it. It's very interesting. It's on page 7 and on page 8 of this newspaper. And so this morning, I've been up for quite a while. It's only 8:15 a.m. London. I did an interview this morning. I interviewed John Adams in Australia. We did about an hour interview. I'm going to publish that interview this afternoon. So we spoke about silver and what's going on with the Perth Mint and places like Kitco and the overall silver market with what's going on COMEX. So let's get to this article and then look at where the markets are this morning, of course, as I usually do. So Saturday, January 24th, 1920. And one of the things about this article is they never mention the inflation that the war has created. They don't use the term inflation, but that's what it was. It was the war that inflated the monetary system. And I think that's why silver went up so much, even though it was heavily manipulated lower, of course, in the pre-World War I period. So let's go through some of the important parts here. Silver, the metal, proved the world sensation in the year 1919. World sensation. I'd never heard of that. Reaching the highest prices in the recorded history of the universe. For the first time in history, silver coin of the leading nations of Europe sold at a higher price than gold coin. This doesn't mean that the ratio was below 1-to-1. They're talking in face value, right? And don't forget the gold coins, like the gold dollar was much smaller in weight, of course, than the silver dollar. This is what they mean. This does not, of course, mean that the silver is more valuable than gold. So there you go. Merely a silver dollar or shilling is worth more than a gold dollar or shilling. So the face value, the silver in the shilling, and I have some shillings here from that period. Basically, you could get if you melted this shilling back then, you could get more than a shilling in terms of monetary value. So that's why the UK had to take the coinage out of the sterling standard in 1920. They could only put they could only put half of that coin in silver. It used to be 925 because the price of silver went up, because during wars, especially a huge war like World War I, there's a huge demand for commodities like silver, not only industrially for weapons and material, but also monetary. The record high price of 79 and 1/8 pence per ounce, British Standard 925, was reached in London market in November 1919. This would have represented $1.73.5 for American silver. Were the British pound worth the normal exchange value of 486 and 5/8 cents in American money. Throughout the latter part of 1919, the London price fluctuated between 75 pence to 78.5 pence per fine ounce British Standard, generally around 77 pence. This compares with prices around 26 pence for many years before 1915. So the price of silver tripled after World War I, from 26 pence to 79 pence. So big move, big silver bull market. I'm going to jump to where they talk about the gold-silver ratio. It says silver better than 16:1. The high British or world price of 79.5 pence represented a value for silver way above the historic 16:1 ratio, to be exact. It represented 11.9 ounces of silver worth 1 ounce of gold at $20.67 per fine ounce of gold. So $20.67, that's what 1 ounce of gold was worth back then. So yes, the ratio went below 12, 11.9 to be exact. And this is the interesting part here, which I hadn't realized, and which shows that silver had been manipulated so much in the pre-World War I periods. It says the yearly average price of silver of around 26 pence for over 10 years before 1915 meant an average of 37.5 to 1 between 1 ounce of silver and 1 ounce of gold. So this is where it gets interesting, the geopolitical situation here, and why the people in London and New York love to keep silver suppressed. And even back then it happened. It says the once despised silver coinage of the silver nations such as India, China, Mexico, etc., now commands the biggest premiums. The money of the leading gold nations of Europe and other parts of the world sold at a discount. Silver coinage throughout the world is worth more at bullion value than the par value of gold coins. So we'll go on to a part of this article where it shows the people who really try to control the silver price, and they've been doing it for centuries. It says Great Britain now a debtor to India. That's not good, right? Probably even more important than the huge coinage demand for silver is the demand to pay the net trade balance owing to India, China, and silver nations by the world. It is fortunate now in the world shortage of gold. It is fortunate now in the world shortage of gold that these nations will accept silver. The world owes India in 1919 about 850 million rupees, or about $382 million, with the rupee at around 45 cents. The debt to China, Hong Kong, and the East Indies is nearly as great again. Britain has become a debtor nation to India, where formerly she was India's only great creditor nation. This has an important bearing, especially because the premium on the rupee and the discount on sterling exchange practically ensures Britain continuing a debtor nation, and practically ensures Britain maintaining India on a silver basis. So there you go. Very important geopolitically. They couldn't have that continue. So we'll go here now to the part where they talk about the manipulation, because they try to manipulate the silver price lower. And you'll see that it's the usual suspects. The Anglo-American establishment says removal of silver limitations. The silver market was fixed at $1.015 per fine ounce by the Pittman Wartime Act, which authorized price fixing, embargo on silver exports except under license, and which authorized the melting of 350 million silver dollars in the United States Treasury, containing 207 million ounces of silver, of which 200 million ounces were to be supplied to Britain, and chiefly to India through Britain. So here you have the United States melting its silver coinage to supply it to Britain. That doesn't look like it's in the best interest of the American public, does it? On May 5th, 1919, our government announced completion of the contract with Britain and India and removed embargo on exports and price restrictions. London for 2 days tried to hammer the price of silver down and tried to obtain an additional 100 million ounces of silver at a fixed price of $1 or thereabouts. The US government refused the request. The London speculators were caught short, and the price of silver reached $1.19 on May 13th, 1919. When a great boom developed in silver stocks in the securities market. The British countered by withdrawing India from the silver market, officially at least. Since May 5th, no silver has been sold for export to India in this country, and the British government has tried to hammer silver by trying to consign gold to India and by selling Chinese silver short early in the summer. Huge quantities of silver have been exported to China, which has been almost utterly drained of its silver. There is a lurking suspicion that silver for India is being imported into India via the Flowery Kingdom. At any rate, it is a fact that India, the great silver consumer of the world, has not been officially in the silver market since May 5th. This makes all the more remarkable the very remarkable price in the price of silver since the summer. So there you go. I thought you would find this article really interesting. And we've got the same old suspects that manipulate the price of silver these days. The New York, London, Axis, Anglo-American banking empire. They did it back in 1919. They couldn't let the emerging market countries, well, back then they weren't called that, but they were trying to keep silver from flowing to China, to India. They're trying to keep the price of silver down because it's a problem. It's a threat to their banking, a fractional reserve system. So I thought that was really interesting. Does that mean that we're going to see the same kind of move in silver today? I think it's highly possible. As you saw, the price of silver tripled, despite the fact that they threw everything at it. They stopped silver from flowing to India. They didn't allow the Indians to buy silver. And despite that, the price went from 26 pence to almost 80 pence just after World War I. So with that, we're going to look at where the markets are this morning. It is 8:33 a.m. London. We've got spot gold at 1740.50. It's down just over $2. It has been as low as 1735 and as high as 1745.50. I think the key level for gold, as you can see in this daily chart, is the high from the 18th of March at 1755 or thereabouts. And why is that level important? Well, because it's the midpoint of a double bottom that gold is made from the beginning of March. We've got the bottom there around 1675, and we've got the same bottom in the end of March at 1675. That's the double bottom. If we break through this 1755 level, that means that we could go the same distance from the double bottom to that top. We could go basically to 1800 very quickly in gold. So I think the powers that be, the bullion banks, they're watching that level closely. We could have what's called stops there at that level. We could see stops triggered, and that could kick in a lot of buyers, momentum buyers. So we have to keep an eye on that level, 1755. That's in the spot market, not in the futures market. What about silver? Silver is down about 8 cents, 25.06. It has been as low as 24.98 overnight, and the high is 25.21. Dow futures up 24 points. NASDAQ is up 25. S&P is up 3.5 points. The currencies, the pound is down 1/8%, just above 138. The euro is unchanged, 118.67. The dollar is up slightly versus the yen at 109.86. The dollar is unchanged versus the Chinese yuan at 654.70. We've got high-grade copper down 1% at 407.50. WTI crude is unchanged at 59.30. And to finish off, we've got the 10-year yield at 165. So 10-year yield is back down a little bit. It was around 173, 174 recently. So it's down 1 basis point overnight. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.